Good day everyone, and thank you very much for joining. This is our second podcast ever, so please be kind to us. We're doing our best and we've come up with a name on the spot. So today on the spot is our dear friend here, Justin from Ooba Home Loans. He'll tell you a bit more about himself, and he's here to talk about money. Because we are into property and it's all about money. If you don't have money, then you must find someone that will give you money. And hopefully, Justin will give us every detail there is to give, how to get the money to get those properties, and more than one, because we're building portfolios here. Thank you so much for joining.
Thank you very much.
And we also have Joel and Lubona. Between the three of us, we've sold a ton of properties, so we have seen and heard a lot of questions. Some of them are repeat questions, some of them are unique. Every day we throw in with something new. So we're going to try and cover all the questions. We put a few posts out there asking our audience and our clients to tell us what they want to know about. So between the three of us, we're going to try and answer as many of the frequent questions as possible. But of course, you guys are welcome to comment and give us more, because we love doing this and we'll keep coming back and doing more of it. So, do you want to tell us a bit about yourself?
Yes.
And then we'll start hitting you with the hard questions.
Look forward to it. So my name is Justin Easthorpe. I work for a company called Ooba Home Loans. I'm the provincial sales manager, and our primary goal and purpose in life is to ensure that we empower people to own their own homes. And what that means is to try and get a person a facility to purchase the property and allow them to move in. We are an organization that is going into our 25 years of existence. So we have many, many years experience. Many of us are bankers and understand exactly what the banks look for when submitting an application. And we also deal with the 5 commercial banks within South Africa, that being ABSA, Standard Bank, FNB, Investec, and Nedbank.
You already answered one of the questions.
Good.
Thank you for that.
So that as
Like an oracle, forward thinking. Okay, so where do we start? Joel, do you want to start with the questions?
yes, so I've had some questions from investors. I've had 3 questions, but 2 of them are the same. So you're going to be, I'll read them both to you, but it's going to be the same answer. So the first one is, can I use my rental property portfolio to show as an income so that I can expand my portfolio even more? Then the third question, which is similar to that, I already have a bond on my current property. Can I get a second bond for an investment property?
Sure. So yes, absolutely. You can use rental income to motivate to the banks and for sustainability of income. However, there are some limitations and restrictions to that. One of the banks have actually just come out with a policy that says that if you're purchasing a new property, an investment property now, they will consider that rental as income for the current application. But when the bank assesses adding in rental income, there's a few things that they look at. Let's forget about the new product that one of the banks has just launched. But when a bank justifies and motivates affordability of a facility, they want to look at the tenure of the lease agreement, so it shouldn't be a month-on-month lease agreement. They also want to see how many times it's been renewed, and they also want to ensure that it's being paid into the bank account, so no cash payments for rentals. So the answer is yes, you are able to use rental income to substantiate income when submitting an application into the banks. Can I make use of funds from my primary residence to purchase an investment property, as long as you have sufficient in that bond to purchase the property? However, I would always urge an investor to speak to an accountant around how best to structure a facility when investing in property, because there could be tax breaks related to the investment property where you won't necessarily get on your primary residence.
Can I just ask you one thing? So you were saying there that the banks look at certain things. This is my own question. Would a corporate lease be worth more than a personal. So
Yes.
if I'm renting to Luxlive versus if I'm renting to Labonna on a personal.
Yes,
Okay.
absolutely. So the banks do look, I mean, I don't want to blanket it, but in my experience, the banks do look at corporate leases a lot more favorably because there's a corporate backing, there's almost the guarantee of that income, where if it's an individual, it's slightly, you don't really know if that money is definitely going to come, where there's the corporate, there's too much reputational risk there.
Which we've seen as well, clients do prefer. Then the last question that I've got is, what are the key differences between financing a property as an investor and as a primary residence? Are there even any differences?
The only real difference would be how we motivate the application based on affordability.
Okay.
Your primary residence will be an application based on the income that you're earning to be able to afford the property that you're living in.
Okay.
When you're purchasing an investment property and requiring a bond, it may be, you need to use lease agreements and prove where that lease is going into, prove how long the lease is being in for. So that is really the only nuance between the two.
Interesting. Thank you so much.
So, I mean, from the investment point of view, I know sometimes a person will come and buy one property and then they don't realize that owning a property and having a very good profile on payments on that property could qualify them to buy a second one. So is this something you would advise at some point after a certain number of years of keeping a very good profile of paying off their current property for them to consider now going into a second, third and so on?
So, I mean, you need to ensure your payment profile is up to date and clean as possible no matter what you're doing.
Yeah.
Whether you're looking at purchasing the property or not, it's vital because one never knows what's going to happen in the future and you need to ensure that your contractual obligations are kept up to date at all times. But yes, the banks will also say, geez, this client has paid in X amount extra into this bond account so we can see his ability or her ability to repay the facility conducted really well as a bond account. If affordability is there, this is a great client to lend to in the future.
So you would advise a person to start looking at building a profile to buy a second property that they would rent out?
Absolutely, yes. So once again, I think when we're looking at an investment pool of people or home buyers, that is a specific niche in the market. And what is very clear in the South African market as a consumer is the passion to own your own home. And that comes with having security for your family, but also creating generational wealth for your family. So when it comes to creating generational wealth, you don't only want to, and you want to create it through property, you don't want to only hold it for the property that you're living in, but you want to expand your investment portfolio so your family is creating generational wealth through the generations.
That's actually a fantastic way of looking at it. And of late, I've seen a lot of young people go into property very young, but also going into more than one as an investment. And what I've also seen with some of the people who maybe cannot afford single-handedly to finance second and third properties, that they go into companies with some form of a structure. So do you see a lot of that?
Absolutely. We have seen in the last couple of months an increase in applications for investment property. Holiday home applications are remaining static, but we have certainly seen a 10% increase in people purchasing for investment purposes. And what people must never be limited to, is it only me that can afford the facility? What about bringing in somebody that has the same ambitions as goals as you? Is it a family member? Is it a friend? How can I bring somebody else in to build this wealth with me and this investment portfolio with me? And what that does is it alleviates the financial strain of only one person, and you've got two sources of income to present to the banks. And then you're splitting the costs two ways as well.
This brings me actually to there was two more questions that I also saw. So the one was, can you take out a bond if it's like with your cousin? It doesn't only have to be your spouse. And the second question was, let's say all three of us want to do it. Can it only be two people, or can three people take out a bond, or multiple, like many more? Multiple,
and there is a bank that has the ability to put multiple people into one application. I mean, we don't often see more than 3 or 4, but without a doubt, yes, you can. You can purchase a property either through individual names or you create a legal entity where you're able to put register that property in, where all the 5 or 4 or 3 people are jointly and severally liable for the facility.
And then just I wanted to ask, how can you advise someone who has cash to buy a property, like an investment property? For example, someone has $1 million and they want to buy one property. How can you invest them to use the banks to buy a second property?
Absolutely. So everybody will have what we call gearing requirements. So the question one needs to ask themselves is, do you want to put that R1 million into one transaction, into one property, and use all of your savings? Or gear yourself to ensure that you've got sufficient for emergencies? That's the first question. The second question I would pose is that, have you spoken to your accountant about any sort of tax breaks you are able to get when purchasing this property? Because you've paid for it cash now, you're generating an income, you're declaring that income. Is there a mechanism through a bond where you can write off interest and certain expenses on the investment property so that you're benefiting from that point of view, you're generating the most amount of income out of that particular transaction? Or secondly, is I have R1 million, should I put 500,000 rand in one and buy R1 million into a 50% bond, and buy another property of R1 million, put the 500,000 rand into that bond. So now what you're doing is you have your R1 million and you split it into 2 properties.
And you're in any case doing the, okay,
Exactly.
that is so clever.
Yeah.
And you start building up, and then
Yeah.
the next thing you're 30 years old and you're sitting with 6 properties.
Yep, and there's people out there that have done it very successfully.
Why didn't I meet you 50 years ago? Okay, that's fascinating. So I think we started with the big one with the investments, but how about the first-time home buyers? And we all have to start somewhere, and we get so many questions. In fact, someone drove past our office the other day, and they saw our billboard, and they stopped and they said, "I've never even thought, I've been paying rent, and I've never thought that I should actually look at talking about first time. How do we go about it?" And Lubona has got a million questions, so hopefully she won't ask all million, but just the important, the key ones.
No, I only have a couple of questions for you. So I'll start with the first one. So when you meet a first-time buyer and you tell them to say, because they're first time, so sometimes you find that maybe their credit record, they haven't maybe worked for a long time. So we tell them we need to pre-qualify you. By the way, I need you to explain to our viewers what's the difference between pre-qualifying and pre-approved, because they come to tell us and say, no, I want a pre-approval, and we tell them, no, it's a pre-qualification, and then we are not on the same page. But then also they are worried about their credit score, to say, no, they keep, because nowadays you can actually subscribe to all these websites, the service providers on the credit scores and everything. So when they check and they'll tell you, no, my credit score is this high and they don't want it to drop, immediately the bond originator pre-qualifies, it's going to drop. Can you just elaborate on that and just to educate them why it's important for them to do a pre-qualification before they start looking for the property?
Perfect. So I think the distinction between a pre-qualification and a pre-approval is that pre-approval is bank language, pre-qualification is consumer language. So many years ago, the banks used to do a thorough analysis and affordability assessment based on all the information provided by the home buyer, which allowed for the bank to give a pre-approval subject to valuation. However, there's many websites now that say, let me pre-approve you without doing a credit check and without verifying the information being provided. So at Ooba Home Loans, what we do is a pre-qualification assessment, which is somebody asking you to complete a home loan application form, supplying bank statements, supplying your proof of income, and us doing a credit check to understand the affordability assessment to see how much money you have at the end of every month to be able to afford the bond. When we're talking credit checks, there's 2 ways that a credit check is done. We have 2 products, which is an Ooba bond indicator, which is very similar to the online applications that you find in the system, with one distinct difference. is that I will say I earn X, I spend Y, and it will spit out an amount, but it will also do what we call a soft credit check, which says that it's not pulling a full credit check, it's just a soft credit check that will pull out a score to say, have you passed or have you failed bureau score? Now, a question that always comes out as well is, what fails bureau score? What fails bureau score is that you have cell phone accounts, Edgar's, Woolworths, credit cards, vehicle finance, and the banks give that information through to the bureau and advise the bureau as to whether this client has paid that monthly installment in full, on time, or not on time. That is where a detailed report comes from, and yes, that will leave it shows that somebody has done a credit check on you, but I'll explain that in more detail about the credit checks.
Okay.
So that is where you would have a good or a failed score, purely based on the fact that you are not paying the service provider or the people that have given you the credit, the amount due to them on time on a monthly basis. And we can see that you haven't paid in 30 days, 60 days, 90 days, or that you haven't paid it all and you're in default, or that you haven't paid and that company has now passed judgment on you. When you do a credit check, what happens is each service provider is put into pools. So home loans is put into a pool, personal loans is put into a pool, vehicle finance is put into a pool, retail accounts are put into a pool. When your credit scoring starts getting negatively affected is if you're going to Edgar's and opening up an account, then you want a personal loan, then you're going and buying a car, and I'm trying five banks to do a credit card. That is when it starts negatively affecting your credit rating. If we are doing three, and the banks will do, all 4 banks or 5 banks will do a credit check and it will show on there, but it's pooled under home loan. So it's not also saying, well, this client's also now getting a whole lot of other debt. That is when it starts negatively affecting the credit profile of a client.
So some leave a footprint, some don't, basically.
Yes.
So would you advise the first-time buyers then to do a pre-qualification before we start sourcing
Absolutely.
for properties for them?
I mean, I think in all seriousness, it's not only your first-time home buyers. It's any home buyer wanting to get an understanding as to how much I can afford on a facility. We often get clients that say, geez, I really want this 5 million rand house. Because they don't understand what the banks look at when applying for a facility, and they could only qualify for 2.5 million rand. So what's important is firstly to get that consumer into the mindset as to how much can I actually afford, and if need be, try and get them to a point where they can afford their property that they want. So pre-qualification is vital, firstly, to allow your seller comfort that we're bringing through serious buyers. Secondly is we understand what the banks look at, and we've done a credit check. So don't get your heart set on something before doing your homework, because you don't want to go and look at that 2 million rand house. You sign an offer to purchase and you can only afford 1 million. It's vital.
Okay, all right. I think our next viewer here asked us, a lot of first-time buyers, you find they can actually afford, they get a good job and they can afford to buy the home, but they don't have transfer costs. Are the banks keen at helping them with transfer costs, and then up to how much can someone get transfer costs on top of the 100% home loan? Because I stand to be corrected, I'm aware that they're actually very keen on giving the first-time buyers 100% loans. We usually don't have a problem with that with the entry level. So what about the transfer costs?
Okay. So yes, the banks do offer what we call a cost-inclusive loan, which will not cover 100% of the bond and transfer fees. So they would consider, the majority of the banks will give 5% on the purchase price. So it does not cover 100% of those transactions, but it certainly does assist. So what we are seeing is, because we've got a big first-time home buying population in this country, and we see it sitting at around between 43 and 46% of our total applications submitted, and we've even seen sometimes over 50%. Sometimes over 50%. So they're definitely there. And the banks are really trying to assist that first-time home buyer as well by offering products. So last year, the average the loan amount was 1.8 million rand. The purchase price was 1.8 million rand.
Okay.
One of the banks have just increased it to the purchase price of 2.2 million rand.
Really?
So what we're seeing is the banks starting to be a lot more aggressive in that market. They understand that the first-time home buying population is there, and they need to be able to assist them. So there is that product as well. And now what the banks have said as well is that if you and somebody else wants to purchase the property together, only one of you need to be first-time home buyer for you to qualify for the cost-inclusive
Well,
loan.
that was going to be my next question, to say, how does it go if you are partnering? A lot of our first home buyers actually partner with their parents.
Yes.
So you find obviously they're already owning property. How does the bank treat that application?
Yes.
That was going to be my next question. Okay. You've answered it.
It's actually a great idea also for, in any case, when there's someone who already owns property. Maybe they become life partners with someone. It's a great way for that first time partner, they both benefit.
Absolutely, absolutely.
Okay.
Does
We're
that-
asking why we don't get the first time home buyers. We start a little bit higher than the 2 million with most of our properties.
Yeah,
we're working
we're
on
not seeing them. Yeah.
We're going to start bringing in more quality.
You come, we're not saying you mustn't come.
Absolutely, come.
Yeah. Okay.
Do you want
One
to
of the viewers was asking, does the government assist first-time home buyers in any way?
So the government does have a subsidy available to the consumer within our community, but there are limitations to that. So you have to earn below a threshold, a specific threshold. They will assist with costs, with funding towards the transaction. But speak to us if you do have a client that does qualify. I don't want to give the number now because I can't remember. It's in the region of around 22,000 or 25,000 rand and less that you earn in order to qualify for it. But you have to have dependents and there are specific rules and regulations about it. But does government have a mechanism to assist, to put the population into homes? Yes, they do.
Interesting, very interesting.
And we facilitate that on behalf of that home buyer as well.
And interesting, coming from that as well, some of the youth of today, what warms my heart is that from a young age they want to buy property, but they also want to pay it off faster. So interestingly enough, two of the questions that are more or less the same came from a 17-year-old and a 21-year-old. So I was quite impressed and astounded because at that age I was thinking none of that when I was that age. But they asking, they want to buy, they want to get the longest possible bond to get the lowest possible interest rate. So you can answer whether 20-year versus 30-year has a difference in the interest rate, but then they want to start paying extra. So A, will there be penalties from the bank side, and B, are there benefits to that for them then to start building their portfolio, and is it even worth it to try that?
Absolutely. So going on to that as well is that what we have seen is the age of the first-time home buyer is increasing slightly. Why is that? Because your first-time home buyer understands that should you give the bank a deposit, it's going to assist you in a positive outcome from the bank because the bank is saying this person's prepared to give me some money. And that first-time home buyer realizes that if I pay a deposit, it's reducing my monthly installment, and it is also ensuring that I get a better rate concession. So now, yes, whether a person should take 20-year or 30-year is a question we need to ask. The first one is, extending from an additional 10 years on a bond will save you on your monthly installments.
Yeah.
So, whenever people talk to us around, interest rates and are they going up, when purchasing a property, it's not a 6-month, it's not a 12-month, it's not a 24-month view. It is a 10, 15-year view on this investment. So budget accordingly. So you could do a 30-year term, you get extra money, you put that money into the bond account. You have the ability to take that money out as well. We can talk around the complexities around a facility where you're putting in and paying out because there's capital deductions, but there is your ability to take that money out again. or you want to reduce your installment. So we could have a whole podcast on that. But there is certainly no penalties if you're wanting to pay extra money in to your bond. And why is that so important? Because people say, should I pay extra in? Because what happens is the banks calculate how much interest you owe them on a daily outstanding balance, capitalized monthly. So if you pay in extra money, you're paying less interest on the capital portion that you owe the bank. Okay. So it's really a good idea. And what then happens is that you're reducing the term, because the first 5-10 years of a bond, you're paying off interest. That's all you're doing is paying off interest. You're not paying capital. So there's certainly no penalty, and it's to the benefit of the homeowner to pay it off quicker, to reduce interest.
Okay. So go for it and then buy a second one.
Absolutely, absolutely.
Oh, okay.
And
All right.
third and fourth.
Okay. All right.
We've got some questions. Obviously, we've got a lot of foreigners that are
Yes.
buying at the moment.
Yes.
And one of them has asked us, can a purchaser from the States qualify for a bond? If so, what is the criteria aside from income requirements?
Okay. So what I think is very important is for us to clarify what a foreign national is in the eyes of South Africa. A foreign national is anybody that arrives in South Africa on a visitor's visa. Okay? That is considered what we call a total non-res. The second one is I'm residing in South Africa on a critical skills visa, on a spousal visa, or on a work visa. Okay. So there are different views on a total non-res, and there's also exchange control regulation on what we call a total non-res. Exchange control regulation says that you cannot grant more than 50% to a total non-resident in this country. Okay, so it's limited by legislation. And there's also repatriation of funds at a later stage. So if you're saying I'm coming from the States and I'm here on a visitor's visa and I'm employed in the States, yes you can. And when we say employed in the States, you're salaried, you can prove your salary by way of bank statement, salary slips and work contract.
Can I just pause there?
Yes.
Sorry, I hope I won't interrupt your thoughts. So I've got a client, they are pensioners,
Yes.
okay? So they've got proof, they were in the military, so they've got proof that they've got millions sitting in their pension, which would be like way over whatever property they would want to buy. So then they have like a stable income that comes from that pension every month. Would then they qualify, if they are permanent residents, would they qualify to get a bond or not?
So the first question is, you're telling me they're pensioners, have they taken early pension or are
Early
they?
pension. They are not old.
The young pensioners.
Young
They're young
pensioners.
pensioners. I'm seeing a lot of them actually. I think
Yeah.
this is like the third couple that I'm seeing
Okay.
from the States. I don't know
Okay.
what's happening. They're taking early pension coming here.
Okay, so we've got to always bear in mind that the age of the applicant is going to influence the term of the loan.
Okay.
So South African banks don't really like to have a facility that will extend too much further into their retirement age. And in South Africa, retirement age is 63 or 65. So what they could say is, let's say they're 55 or 58. Yes, I'm going to give you a bond because you can prove that the sustainability of your income. However, I'm only going to do it over 10 years. But then you've got to be able to prove that you can afford that facility over 10 years. Okay. So it's not impossible, but if you come to me and you say, I've got an 80-year-old person wanting to purchase a property, and they've got a big retirement pool, I would suggest that they take that money out to purchase the property cash. I'm sorry, I want to jump back to the first-time home buyers quickly, because when we're talking about age, and we do get some people at 17 wanting to purchase property. What we've First time, yeah. What we've got to remember is that in South Africa, we've got statutes of age to contract. So you can't contract at the age of 17, so you can't purchase a property in your own name.
Okay, so guys, if you're watching and if you're 70 years old, you cannot buy property with a bond as a first time.
So that saying that
Oh, no,
goes, it's
definitely
never
not.
too late is not completely true.
Can be too late.
We just won't give you costs.
Okay, but that is very interesting, because as Lubana observed, we're getting so many foreigners wanting to move to South Africa. So you started with the complete non-res,
Yes.
meaning the person is not employed here, but we have sold houses to people who are employed in South Africa and they've gotten a normal bond.
Yes.
Even though they may be on a 5-year employment contract.
Sure.
So are they then treated the same way as a South African would?
No, they're not. They do go through a completely different credit assessment flow. However, what the banks do look at there is, and certain banks have got certain credit policy requirements. So you could come to me and say, Justin, I saw a client who got 100% bond and is here on a work permit. I know which bank it is, and I'll know why that client got the 100%. So each bank has got a different credit policy as it comes to somebody within that working on a work permit, and also whether they bank with them or not. So there are specific limitations, and also what the banks want to see is how long is your work permit, who it is that you're working for, also that your work permit ties up with the company that you're actually working for, because what we often find is that people come in on one organization and move to another organization, yet your work permit is stating that you're still working for that other organization. So the length of it, and also how many times it's been renewed in the past. So it's the company, it's the tenure of the visa, it's how many times it's been renewed in the past, where you bank, and then the affordability. But don't think, not every single person working here on a work visa that needs that bond will get 100% bond, as in anybody.
Okay, so I think a couple of years ago we sold a property to one of our clients who was in Germany. They're working in Germany and they bought a property here. The bank was able to give them a bond, but though they were putting in 50%. So I didn't really go into the nitty-gritties to find out why the bank gave them 50%. But I know what I knew was that they just wanted to put in the 50% deposit because I had sold their other property. So I also just want you to educate our South Africans that are living in the foreign land and who still want to get a bond. How possible is it, and what are the banks offering?
Absolutely the same. Once again, it's going to be limited. The banks may call for a deposit. We call that South African residents working abroad. Okay. So there's a particular credit policy with the banks, and each bank has got a deposit requirement for that for a person in that situation.
See, everyone loves South Africa, even the ones that leave, the foreigners. We still have
Absolutely.
the best country. There's a question I actually want to ask that someone asked, and I really like this a lot. Can you provide information on any green or sustainable home loan options available, such as solar?
Yes. So that's becoming a really big talking point in the home loan market at the moment, and it's a product that we do offer to the consumer as well. So the banks, bar one at the moment, are coming up with a solution to finance the alternative, the solar or inverter on the home loan application. So when we're speaking to the new homeowner and we're doing the application, and we rely on real estate as well to start speaking to these home buyers and saying, do you require solar? Because the banks are assisting in adding that into the costs, and that is one of the trends that we're forecasting for 2024, is an increase in the amount of people requiring an alternative energy solution for their homes. So absolutely, there's one bank that will come on very soon, but all the other banks offer a facility to add it on to your home loan.
Okay. And what if someone has an existing home loan?
Can still do it as long as there's sufficient value. We can do it.
There was something there was a question I wanted to ask as well. It was.
So while you're looking, I'm going to also ask you, I'm again crossing borders because I'm very fascinated with that. At some point, I've been living in South Africa for 30 years. I'm a South African citizen, but I also have a citizenship for another country. And I got the idea I should get a bond and buy property elsewhere. Can you get a bond in South Africa but buy property in another country?
You can only bond on a title deed on a property that's registered in South Africa. Okay. So you would have to bond your house and send your measly rands over to
Okay.
see what you mean. Okay.
So
So-
stay here. The answer is
It's still here. Unfortunately, the banks need to hold the title deed, and the only title deed they can hold is in the borders of the country.
okay.
And can someone also, the other question that we saw was, can someone also get additional finance on the existing bond to renovate the property? How does that work?
So what the banks will assess there is the current value of the property, and is there sufficient equity in the value of the property to cover the renovations and do what we call a further loan or a re-advance, or do we need to do it as what we call a building loan? So when a consumer or the homeowner does a building loan, the banks are going to say, always remember, when you've got a bond, the banks own that property until that title deed is released.
Mm-hmm.
The banks are going to say, okay, you need 200,000 Rand. I want you to give me your contracts that to the value of 200,000 Rand, so I can ensure that the renovations are done. And we may look at it as a building loan and say, okay, let's say I'm building on another room, and an assessor will come out and inspect and say, okay, you're at roof level now. I will pay out X to the contractor.
Like
So-
a building loan?
Absolutely,
Okay.
absolutely. Or it could be that I want to do a facelift, and I've got a million rand house, and I've got a million rand bond, and the bank has found value of 1.2 million rand. We can then take that up to 1.2 or 1.1 million rand, and we tell the banks that we're doing cosmetic renovations to the property.
The thing I wanted to ask you was, so if a client is with a specific bank and they've been with that bank their entire life, and they obviously approach you to do a home loan application, and one of the other banks gives them a better deal, do they move all their stuff over? Do they decline with that bank? What do they do?
So when, and a lot of questions came around, why should I use an originator?
Yeah.
And what is important in this day and age is that how do you know if I'm going to my own bank whether I'm getting the best deal? Because I've only got one offer. So as an originator, we're really a comparable home loan solution. We are going to present you with offers that the banks are prepared to offer you, and the banks are going to compete for you. The banks are going to compete for that one client. And how does a bank compete? Whether it be your own bank or whether it be another bank,
Give you something
is on
better.
price, price being interest rate. Does that bank's credit policy suit the requirements of me and give me what I want? What we see in the banks now, being incredibly aggressive in the market. It's a great time for a buyer to buy because the banks are really incredible. They're fighting for you. They're fighting for you as a home buyer. The banks want to bring on primary clients by offering an additional rate concession. So what you will see is you'll see one bank saying, okay, I will offer you prime, but if you open up a current account with me, which is then a transactional banking, and you run your debit order off, I will give you an additional rate concession. So that could shift that client's decision to move banks because it's such a big, buying a home is such a big commitment that they may very well choose to move to that bank that's giving them the best deal.
Yeah, because we keep hearing this. Don't worry, my personal banker said they'll help me. And honestly, when I hear that, I cringe because I've seen more potential failed transactions or transactions on dangerous ground because one of two things happens. Either it takes so long that by it goes over the allocated time per the offer, and then they have to either convince the seller to agree, but the seller might have another buyer, in which case they lose the opportunity to buy, or it takes very long and then the terms they get are not great. So we always want to say to them, but why not a bond originator? So what is it that they're not losing or they're gaining? First of all, the question is, do they pay for the bond originator? That is, of course, because that's how they see it with their personal banker. And in terms of speed and in terms of just the cost, like you said, of the bond being the interest rate that they get, is there any statistic that shows bond originator versus personal banker?
Absolutely. This is a statistic we have. 46% of our applications going to their bank are declined by the client's primary bank.
We've seen this.
46%.
Yes.
Send it
So,
to me.
so the logic around my bank will give you the best deal, in that statistic shows that they may not necessarily give the best deal, if a deal at all. That's the first thing. Second thing is that you can't, how do you know how do you know you're getting the best deal? I've only gone to one person. And origination, home loan origination is a free of charge service to our community. And people say, well, then where do you get the money from? The banks pay us, because the banks rely on us to grow their market share within the home loan space. We are at the interface of real estate. We're the first ones to get that deal because of the relationships we have with real estate. We're the first ones to get the home buyer and the offer to purchase. Origination and home loans is all our consultants do every single day. They don't do vehicle finance, they don't open current accounts, they don't have to do wills and trusts. They don't have to have queries on check accounts. So we are entrenched in such a way that we have the ability to speak to decision makers in the bank that other people can't, because they rely so heavily on origination to give them the opportunity to compete for that business. So, you know, when we need to speak to a credit manager, there's no reason why. We speak to them. We speak to the head of pricing. Where I am a banker, I love bankers, and I will never, but there's a hierarchy in the bank. You can't just phone the head of credit as a banker. You can't. So that is where the value proposition of origination is so vital, is that our primary aim is to ensure that we get you, home buyer, the best deal in the quickest possible time at what you need. And if one bank's not going to do it, you've got 4 other banks or 3 other banks that may very well do it.
Yeah.
And not wait. We track when the suspensive condition is fulfilled. If you give me an offer to purchase and you say, Justin, I've got 10 days to get this bond, I know what 10 days means. So you know, there's the whole origination's been around for 25 years. We're the first to open. It's you know, and people still don't know about it, which is, things like this is vital to get into our communities and understand that there's somebody there to fight for you. And banks are big ships. You need somebody to help you and guide you into where your end goal is.
Am I right in saying that, let's say you bank with Bank A, and when you do the application, Bank A and Bank B gives you a deal,
Yes.
that you can use those two up against one another to still try and get you an even better deal than what they originally asked.
That's the value proposition we offer as origination.
So the same way as, like, use a proper agent who specializes in your area, use a bond originator.
Absolutely.
Don't try and do things yourself.
Please.
You won't try and operate on yourself
Yes.
if you have a broken arm.
Absolutely.
So come to the
So
specialist.
now, very, very important question, because it's happened, I think, to all of us, where a buyer gets the bond approval,
Yes.
and before the deal is lodged, they go and buy a car, open an Edgar's account, you know. So what is your advice around that?
Okay. So I think for somebody to just get an understanding as to what is, you know, we talk about affordability. Let's just talk about what affordability is. So affordability, and the banks are regulated to ensure that the home buyer can afford the facility at the time of submission. Time of submission, and remember, with a home loan, they're going to take ownership only sometimes 3 months later, so until time of registration. Regulated by National Credit Act that says, consumer, prove to me that you are able to afford this facility I'm giving you. So it's R1 million. Let's look at 10%. So and you're getting it at 10%. So on R1 million, the bond repayment is 10,000 rand. What is your gross monthly income? What is your net monthly income? What are your declared expenses? And your declared expenses are your household expenses. What are your contractual obligations? And do you have 10,000 rand left at the end of every month after all of that to service the R1 million facility? Another calculation, there's 2 calculations. So that's net surplus income and your bond repayment can't exceed more than 30% of your gross monthly income. So at 10,000, I have to earn a gross monthly income of 30,000 Rand. And we can get into the nuances of self-employed, but bottom line is that as a self-employed, you're earning X, you're spending Y, whatever your accountant tells me, whatever you're declaring to SARS is what we're going to use. So that is where it's very important to understand what net surplus income you have. Now what happens is, let's say you're marginal and we manage to get the deal through and you've only got 2,000 Rand left. Now you go and buy a car tomorrow and you're spending 3,000 Rand. The bank has the ability, and they do, prior to registration, before being lodged, they can do a reassessment of affordability on you. And if they know that you can't afford it prior to registration, they will pull that registration and they will not allow you to register until you can prove to the bank that you can afford it. So don't do anything.
Don't, just never. Don't ever.
Don't go into a banking app at all until
Just
they've
don't
got
do
this
anything.
registered.
Stay at home. Stay in your rental apartment until the day of registration.
And I think that's also very important, where people sometimes fall short of costs. And then they think, well, maybe I should go and get a personal loan. So my advice is, if you've worked through an originator, ask them, can you find out from the bank what their calculation was and if there was scope and how much that scope is. So if I know that the bank has found 5,000 Rand net surplus income and I need 3, then we know how much to play with as well.
And also, while we were talking about those timelines as well, besides for if someone goes and does something, let's say I take out I get approved, but then I take too long to submit documents, yes, and there's time that passes. I know after 3 months and they start
Correct.
looking at it again. So
Correct.
Also vital to move quickly on something.
Absolutely,
Don't drag your feet.
yeah. So there's two questions. That's also a compounded question. So when I get a pre-qualification, how long is that valid for? And it's usually it's 3 months. So that's the first one. Second one is that in any application, a bank always wants 3 months history. They have a lot more history, but they want you to provide 3 months worth of history, which is salary slips and bank statements. So 3 months is the number. But also what a potential home buyer needs to remember from your guys' point of view as well, is that you're working on timelines. So if you've signed an offer to purchase tonight, and that home buyer is aware that they've got 14 days to get the bond, they need to get the supporting documents to the person doing the bond as quickly as possible. Yeah. Because our service level agreement with the bank is that it should not, unless there's questions in between, it should not take more than 5 days from date of submission to the application to date of final grant of that application. Mm-hmm. The biggest delay is obtaining documents. Get your documents ready quickly. Self-employed as well. And once again, if you're a self-employed individual and you don't know what documents you need and you're looking for a property, speak to an expert. Find out what you need, what the banks are going to ask for, because the last thing you want is for your sale to be jeopardized because I've signed it off to purchase, I've got 14 days and my accountant hasn't done my management accounts yet.
I've got a question, or rather I would ask you to clarify to our viewers when it comes to self-employed, because I think there's a difference between, you find that someone owns a company, right, and they're the sole director of the company. So how does the bank treat that applicant? And you find someone will tell you, no, I'm not self-employed, I have a salary, but they're still the sole owners of the company. They want you to use the pay slip. So can the bank look at such an application?
So the banks do at the moment look at some self-employed applicants if we can prove that they've paid themselves the same amount of salary over a particular period of time. The banks, one of the banks in particular, is looking at that and saying, don't give me financial statements, let me use the salary slip because it's going through your account every month, but they may still call for the financial statements. Okay.
Well, actually that was my question. If they use the pay slip, will they still...
Each bank is different.
Each
bank is different. And also if you know, 1 month your salary is one thing and you've got a salary slip and then it's different the next month, the banks want to see consistency. But as a self-employed applicant, I always do ask for financial statements because that question could come back to us. Okay. And what is it that the banks look for and why do they look for it? So because you're deriving an income from a business where you're the sole director, you don't necessarily have to be the sole director, is banks are saying, okay, you are drawing an income from this business. Does the business have the ability to pay your salary going forward? The only way that a bank is able to assess you as an individual is they look at history. Everything in a bank credit application is looking at history to determine future. Look at your credit profile. Look at I want 3-month salary slips. I want your last 2 years orders of financial statements. I want your last 6 months management accounts. So when the banks ask for financial statements, what they're saying is they are looking at your company and seeing the sustainability of this company being able to pay you going forward.
Because we are a nation of self-employed people, really. I mean, there's so many entrepreneurs out there, and what we find is a lot of them earn massive income, actually. And you and I had a case, of late where a lot of money was being earned.
Yes.
But it seems equal amount of money was being spent.
Absolutely.
So, how would you approach someone who has the ability to earn a huge amount of money? They have the ability to purchase something if they just structure the expenses and so on properly. Would you say to them then, if you're net zero every month, rather let's build you up for a period of how long? What would you say? 6 months?
So everyone's unique. So if we're looking at a self-employed and we're looking at financial statements and we need to grow financial statements, that's 12 months.
Okay.
If we're looking at an employed individual that's maybe had one or two hiccups and they've got a 30-day account that they need to rectify, then it give us another 30 days. Each scenario is going to be different. Each scenario is going to be different, unfortunately. So I can't give an exact.
Okay.
There's no science to that, really.
Okay, but maybe then the conversation should start prior to putting an offer.
Absolutely,
with
100%.
So rather just chat to you, because often what we find with clients, and especially the wealthy clients who have maybe bought many properties, and sometimes we're even scared to say, have you pre-qualified? Because then it's like, do you know who I am?
Absolutely.
I run A, B, C, D.
Yes.
True.
And what you're trying to put across is that this is actually for them to be able to buy this 10 million, 20 million, 30 million rand house.
Absolutely.
And then that will bring me to the next question is, we always thought that you cannot get a full bond or a 90% or an 80% on a 20 million rand house. However, I have sold a 22 million rand house on a 90% bond.
Yes.
So is there any hard rule about the percentage, or is it all personal?
So I think what's very important to understand from a banking perspective is that I've spoken about history and how the bank determines affordability based on history. But every applicant is unique in its nature. So you could have a 20 million rand purchase price, and the banks may give 100%.
Okay.
But one needs to understand how did the banks view that? So it could be he's got a very strong balance sheet and the banks are comfortable with the client because of his balance sheet. It could be the very nature of the person purchasing the property and the influence they have. It could be that they've structured it that, yes, you're seeing it as 100%, but the bank has taken other collateral or other security into account to get to that 100%.
Yeah.
So there are bank policies that are in the market that says the bank's credit policy dictates this. However, it's not a hard and fast rule. It is motivating it to the credit manager, which is what we do every day, to try and get the credit manager to see what we see. So, I always say, always stick to your loan to value criteria of the credit policy of the bank, because that is going to make your sales stick. But always bear in mind, as a buyer or as a seller, if you're presenting an offer that falls outside of that, it is not an offer until you have a bond grant.
And I mean, we spoke about renovations, but often we have people who come and they want to buy land, they have a dream home in mind. They don't have enough money to finance themselves. But what sometimes people will do is they'll buy the land and they'll ask for a bond just on the land, and then you find the struggle starts with building. And we even have a few properties that are just on foundation stage.
We call them half completed.
Some are, just on the roof stage, and people ran out of money. So, what is the structure in terms of applying for building bond or a land bond, or how would you advise one approaches it, especially if it's a first-time home builder?
Sure. Yeah, building a home. So I think there's two distinct differences that we have to make. Is firstly, am I buying this piece of land, and my vision isn't to build on it yet, and I need the money now. So if that's the case, you can bond it, but the bank's only going to give you around 60%. So you're going to have to come with a 40%. Okay, and then at a later stage you can do building, or you're purchasing a piece of land with a vision of building on it. But then if you want a facility on it, you've got to package it to the bank as a building loan. So here's my purchase of my land and here's my building contract. And we're going to put it together as one loan, which means that you're not limited to the 40% deposit requirement on land. You're limited to a normal building loan, a building loan.
But you need a builder.
You need a builder, you need a contractor, yes.
You can't identify the land, you need to identify the land and the builder.
And the builder has to give you a contract.
Yeah.
Stipulating how much it's going to cost to build. But if you choose to pay cash for the land and you want a building 2 years down the line, once again, it's just considered a building loan. Now, what's very important as well, and we see it all the time, is that you've got to be very careful as to what sort of bond you're taking on a building loan, because banks take progress payments. So if you're doing a 50% bond, so you're building for R1 million and I only need 500,000 rand, the banks are going to make you pay that 500,000 rand first before their 500,000 rand kicks in. And it could mess around with the progress payments as the property is being built. So once again, every buyer is unique, but if you come to me, I would say let the bank take ownership of that building loan, because then it's being managed correctly. And we all know, you're going to build, you plan on building for R1 million, you're going to spend 1.5 million rand. Unless you stick to your contractor's quotes. But people want different taps and different this and different that.
Yeah. So it actually makes it quite difficult and complex if you haven't got the experience.
Absolutely. Let the bank help you with it.
Yeah. Any other questions, ladies? We
I
learned
think
a lot
we've covered
today.
almost everything. Our viewers can just drop us the questions on the comment section and we'll forward them to Justin.
So yesterday the announced interest rate doesn't change.
Yes.
So what do we expect for 2024? Last year we felt that it was harder to keep the work flowing. How did you see it overall in the country?
So I think it was a tough year for many South Africans, whether you're in real estate or whether you're looking at purchasing a property. It was a tough year overall. There's many things that happen in the world, and unfortunately our South Africa is very dependent on what happens in the outside world. And I mean, a simple thing like interest rates, wars negatively impact us, the price of oil affects us. And talking about interest rates yesterday, it's a good sign. We've been saying that we've reached the top of the interest rate cycle. And yesterday proved that we perhaps have reached the top of the interest rate cycle, which in the mind of everybody just gives a bit of sense of relief to say, maybe we have now reached the peak. We do believe that we're going to see interest rates reduce through the course of the year. And I don't think we're going to see big cuts. I think we're going to see 0.25. And we're hoping to reach the level of at least 1% by the end of the year, which does a few things. Firstly, it alleviates those existing people, the existing consumer who's got debt. And the second one is people wanting to enter into the property market. It's cheaper. So there's definitely positivity. I still believe that if you want to buy and you need a bond, buy now. Banks are competing for your business. They want your business. A bank is looking. I mean, it really is a great time from a bank's perspective. And obviously you have to have affordability, and you need to be a good person to be able to pay your facilities. But the banks are really playing the game when it comes to finance.
Excellent message. So is this your message? Buy now.
Buy now. Remember, purchasing a property is a long-term view, not a 6-month view, not a 12-month view. So understand your budget and budget accordingly.
Any message, last message from you, Joel?
Bye now.
Bye now. Give us a call. Always on the ball.
Thank you so much for watching. Hope you learned something. I hope you enjoyed it. Any more questions, please? We're going to try and do this monthly, so we really appreciate your input. Your questions help us build this content, and we do appreciate you also. If you decide to buy now, give us a call.